Before you sell that Dogecoin or cash out with earnings, you might be making a huge mistake. Every year, people lose thousands of dollars in crypto taxes simply because they don't know these strategies to minimize their taxes. But today, I'm going to show you how to legally pay the least in crypto taxes and keep more of your hard-earned gains. By the end of this video, you'll know the 5 strategies that experienced investors use to legally reduce their crypto tax bill and how you can do the same. Real quick, this is not financial tax advice, just educational information to help you understand your options. Always consult a tax professional before making decisions about your money. I've linked below a list of crypto tax CPAs Awaken recommends. Now, let's get into the fun. All right, before we get into these tax savings, let's break down how the IRS actually taxes crypto. If you're thinking the IRS doesn't track your crypto trades, think again. At the top of Form 1040, the IRS now asks, at any time during 2024, did you, A, receive as a reward, award, or payment for property or services, or B, sell, exchange, or otherwise dispose of a digital asset or a financial interest in a digital asset? If you check no when you did trade, that's a big problem. If you sell, trade, or spend crypto for more than what you bought it for, that's a taxable event. And now it's not just selling. Things like swapping one crypto for another, staking, mining, yielding, farming, or even receiving airdrops, that's all taxable. But the good news is that there are completely legal ways to reduce or even eliminate those taxes. So let's talk about them. The easiest way to pay less in crypto taxes: don't sell. I know it seems common knowledge, but it's important to state. To understand this, we need to define short-term versus long-term capital gains. Short-term is when you hold your crypto for less than a year. Long-term is defined by holding your crypto for over 1 year. If you hold your crypto for over a year, you qualify for lower long-term capital gains rates. Short-term capital gains are taxed as ordinary income, ranging from 10% all the way to 37%. But if you hold for over a year, long-term capital gains are taxed from 0% to 20% depending on your income. For example, let's say you bought $10,000 of dog whiff hat. You hold that whiff for 1 year and you sell it for $100,000. Since you held it for over a year, you'd pay the lower long-term capital gains tax. But let's say instead of waiting over a year, you only waited 2 months. If you sell your dog whiff hat for a profit, you will have to pay short-term capital gains tax, which can be as high as 37%. That is a huge difference. So if you're not in a rush, just hodl. And if you're in it for the long run, make sure to keep watching, because one of my favorite strategies is coming up that can reduce your crypto tax to 0. Our second strategy is called tax loss harvesting. Let's say you bought Ethereum at $4,000 and now it's worth $2,000. If you sell, you can claim a $2,000 loss on your taxes, which can offset your taxable crypto gains. This is called tax loss harvesting, and it's a strategy that rich investors use all the time to legally lower their tax bill. The best part, unlike stocks, crypto doesn't have a wash sale rule yet, which means you can sell at a loss, claim the tax benefit, and instantly buy back in if you still believe in the project. That means you could reduce your tax bill and stay invested in your favorite coins at the same time. If you want to automatically calculate your losses for tax loss harvesting, you can use crypto tax softwares like Awaken, which will automatically generate a report when you upload your wallet for free. Want to pay 0 in crypto taxes? Move somewhere that doesn't tax capital gains. For example, if you live in California or New York, you could be paying an extra 10 to 13% in state taxes on your crypto. But if you move to Texas, Florida, or Wyoming, you pay 0 in state taxes. And if you're thinking next level, some countries don't tax crypto at all, like Portugal, the UAE, El Salvador, and Singapore. That means if you made $500,000 in crypto gains, instead of handing over 6 figures to the government, you could keep every dollar. Obviously, moving isn't for everyone, but if you are a serious investor, it could save you a fortune. Did you know that you can buy crypto completely tax-free if you use a Roth IRA crypto account? Okay, here's how it works. With a Roth IRA, you invest using after-tax dollars, money that has already been taxed. But the best part, your gains grow completely tax-free and you don't pay taxes when you withdraw in retirement. For example, if you bought Bitcoin at $20,000 and it grows to $200,000, by the time you retire, guess what? You owe zero taxes on that $180,000 gain. That's a game changer for anyone thinking long-term. So if you're thinking of opening one, there are a couple of platforms that allow you to open a crypto Roth IRA, such as iTrust Capital, Bitcoin IRA, and also Crypto IRA. The last strategy that we'll look at is making crypto donations. So you want to save on taxes and do a little good for the world. Good for you, first of all. If you donate crypto to a registered charity, you get a tax deduction for the full market value and you avoid capital gains tax. This means you will not owe money on the appreciation of your crypto. For example, if you bought Ethereum at $500 and now it's worth $3,000, donating it means you get a $3,000 tax deduction and you don't owe any capital gains. That is a double tax win. All right, let's recap. The 5 strategies we covered for lowering your crypto taxes include: hold crypto for over a year to reduce taxes, sell losing crypto plays to offset gains, move to a crypto tax-free state or country, use a Roth IRA to buy crypto tax-free, or donate to save on taxes. If you want to make filing crypto taxes easy, use Awaken to automatically track your transactions and generate tax reports. You can upload your wallets for free at awaken.tax. If you found this helpful, just hit that like button so that more people can see this video, and comment below with your favorite crypto tax hack. If you have any questions, we read those all the time. And if you are tired of manually tracking your crypto taxes, get started for free with Awaken by connecting your wallets and exchanges. The link is in the description.